South Africa is a very rich mineral country, and the sector has fueled the economy for decades. It's always been one of our staples, but recently the country scoring low on the Investment Attractiveness Index. Yes, there's an index for that. The industry also seeing a 100 billion rand slide in profits, going back down the mine shafts, it seems. That's due to lower commodity prices, a tough operating environment due to the blackouts and our ongoing failure of the rail network. Let's get the thoughts then of one of the biggest companies, PwC. Andries Rossouw joining us this morning. Andries, good morning to you. How are you feeling this? Because you really do have the odds stacked against you.
Morning, Gareth. Yes, the odds are stacked against us, but we also have fantastic opportunities in the mining sector. The energy transition will require a number of critical minerals in this country and abroad that will be required. So we're going to need much more mining than what we have at the moment. The reality, unfortunately, for the last year was that prices came back off record high for record rand price heights for coal, iron ore, gold and the PGMs, and therefore dropping down the revenue line by 10%. And then on the cost side, well, we're all very much aware of the high input cost, and the weaker rand certainly adds to the input cost for the mining companies as well.
I mean, it's a fair point when you say there are opportunities, because there are minerals that, as we move into this just energy transition, will be required. But how do you continue mining that when you're dealing with issues like blackouts, when you're dealing with issues like a lack of rail infrastructure? It's great to move on to the next phase of your business. The problem is you've got issues outside, external issues that might affect that next phase for you. How do you plan around that?
Well, it affects the whole country.
Yeah, it certainly does. Andries, it looks like I may have lost you for a second. Forgive me, Andries, I'm going to interrupt you. One of our Zoom networks failed. Maybe just pick up on that answer for me again. You were saying it's affecting the whole country. Go for it.
Yes, so the infrastructure constraints is impacting the whole country. And the reality is that on the water side, the electricity side, and the mine-to-market infrastructure side, we desperately need proper upgrades. The mining's that moving and going, and there's a big willingness from the sector and I believe from government to make it work in a collaborative way. We need to fix it for the country.
We do. Let's talk public-private partnerships for a second. There's a critique that is suggesting because of government's failure, they're leaning on you as the private sector to fix this. What do you make of that critique?
So I think it's up to all of us to work together in order to get it fixed. Government doesn't have the capacity at the moment in order to deliver and fix it all. And I think we acknowledge it, and as the private sector and government accept it as government itself. If we want to make this country work, let's work together and get it sorted out.
Why do you think government doesn't have the capacity? Surely you know their shortcomings.
Well, there's a funding capacity constraint. Economists on the show would have spoken widely about the fiscal constraints. There's also people skills constraints. There are fantastic, good people in government, but you need the hands, you need the experience, and they're just not enough at the moment and not enough funds to get the right skills on board.
Let's talk market-wise as well. Commodity prices certainly aren't on your side. That's an external factor. Internationally, it's also just something that's difficult to manage. I'm just curious, from a business side, how do you begin to navigate the commodity prices and the drops?
Look, our mining companies have to be resilient. They understand that the industry is cyclical. They need to, on the one side, invest through the cycle, on the other side, be able to deliver when prices are a bit lower. Although prices are lower, we still had very nice 30% EBITDA margins for the past year. That did include some of the high prices in the year. And it's going to be a tough next 2 years for the industry, and we're already seeing cutbacks in terms of discretionary expenditure, cutbacks in terms of people. So it's cutting cloth to the right size. The key, though, is that the industry should be able to be ready. It's in a very strong financial position to be ready to catch the upside.
100 billion rand in losses. Ordinarily, this results in a lot of jobs being shed as well. How many jobs is PwC going to have to let go of?
As on the PwC side, we are not seeing any job losses at this stage. We're managing. We are delivering into the market. And we're there for our clients in the tough times and the good times.
I just want to go back to the public-private partnerships for a second as well. When you look at something like the issues we're having with Transnet at the moment, what would Andries Rossouw want to see different at Transnet? How do you turn that around? Obviously, working for one of the biggest mining organizations in the world, you must have experienced other railway networks, other mining infrastructure around the globe. How can we try and fix Transnet in this country? Is it an easy fix or is it just too far gone?
Well, there are no easy fixes. I think there are no easy fixes. It will require some dedicated work from everyone involved. But the reality is that we can fix it as long as there's acknowledgement that there's a problem, as long as there's a common purpose and clear, open, robust communication to deal with the problem. And the mining sector is very willing to help. They have put, and perhaps the sector and government, in order to resolve the problems.
I just want to talk about the report that your organisation put out, the PwC report. So apart from the 108 billion rand slide back down into the mine shaft, as I mentioned, 29 domestic mining companies showing a net profit. So it almost doesn't make sense. So is it a drop in profit but still profitable to run a mine in South Africa?
Yes, so it is still profitable to run a mine in South Africa as long as you focus on being a low-cost producer. The mining companies cannot control the final cost. They can only control how much they deliver into it and try and produce at the lowest possible cost. And that is where it's important that as a country we provide efficient infrastructure in order to reduce the cost so that our industry can remain competitive.
Oh, that's what we're hoping for at the moment. Despite all the issues, it sounds fairly upbeat. Andries Rossouw, appreciate your time this morning. PwC's Africa Energy Utilities and Resources joining us this morning. It's a lot of money that's being left on the table. It's vanishing, but it's good to hear at least we're not talking, as far as PwC is concerned, no job losses, at least for them, in the mining sector.